Hey, what's going on? Welcome back to Dapper Dividends. I am Russ, and I know you've had that burning question. Are there tax-free dividends? Yes and no. We're going to cover, get you up to speed, get you out of here, dividends and taxes. But before we do get to that, if at any point you're helped in this video, help me out with a like and a sub. And without further ado, let's get to dividends and taxes. There's two types of dividends, qualified and non-qualified dividends. Qualified dividends, according to the IRS, are the dividend must have been paid by a U.S. company or a qualifying foreign company. The dividends are not listed with the IRS as not qualifying. And the required holding period has been met, which a lot of people don't know this, but you have to hold your dividends for more than 60 days in a 121-day period, and that starts 60 days before the ex-dividend date. So Uncle Sam's trying to keep you honest and not have you go in and buy for the dividend and then sell immediately right after the ex-dividend date. Qualified dividends are taxed at a capital gains rate of 15%, while non-qualified dividends are commonly taxed at your ordinary income tax rate. And some examples of non-qualified dividends: almost all dividends paid out by REITs, generally master limited partnership dividends, unless they are invested in qualifying corporations and they receive a qualifying dividend and pay that qualifying dividend out to you. Or dividends paid on employee stock options, tax-exempt companies, savings and money market accounts, credit unions, and other like entities. You will not pay dividends if your taxes are in one of the three lowest federal income tax brackets and you receive those qualified dividends. And regardless of your tax bracket, if those are held in a tax deferred or a tax advantage such as a retirement account, you will not pay taxes on those dividends. If the dividend was a non-taxable return of capital, you will not pay taxes. Word to the wise here, MLPs, you will pay taxes in a retirement or a tax deferred account if the income hits $1,000. Now, when that happens, the MLP dividend income becomes a UBTI, which is an unrelated business taxable income. So if you're coming close to that, the best thing that you can do is to dispose of those shares and then just buy an ETF that tracks MLP performance. So this is definitely something to talk to a tax professional about. But if your MLP dividend income, if your master limited partnership like fund, ticker symbol FUN Cedar Fair, they are an MLP. If your dividend income from an MLP is not going to go over $1,000, don't even worry about it. Check out these brackets. You can see why I preach over and over about holding REITs in a tax advantaged or tax deferred account inside your retirement account, because of the taxes that you will not have to pay on those dividends. If you make $40,000 in earnings, you'll be paying 12% on those REIT dividends, such as realty income, if you hold those in a taxable account. But if those are in a tax deferred, like a Roth or a 401k IRA, you will not be paying taxes on those dividends. If you have the option, don't fork over $1.20 per every $10 of dividend income every year to Uncle Sam if you just simply don't have to. Check out this compound chart. That $1.20 per year that you would be paying taxes on and giving to Uncle Sam if it was in a taxable account will compound at 7%, I figured very conservatively, to $4.64 per every $10 of dividend income after 20 years. That may not seem like a lot, but hey, if I have the option, I would like to not give more money than I have to. So that's it. Within a taxable, qualified dividends are taxed at one of three levels: 0, 15, or 20%. And if you hold your stocks for more than 60 days after you buy, you will not pay taxes, because those will be reported at the end of the year on your tax form as qualified dividends. And as always, ordinary or non-qualified dividends are taxed at your ordinary income tax rate as dictated by your taxable earnings, which you can check out right here on the table once again for your pleasure. That's it. It's that simple. Follow me on Twitter at RustyRam78. Check me out on Instagram at Dapper Dividends. I also have a podcast that I do every single week, Dapper Dividends. And none of this is financial advice. I am not a licensed financial advisor, just sharing a passion of mine with all of you. Let me know in the comments what you think, as expertise truly does come from the community. I want to hear what you think. What did I miss? What could I have done differently? Let us know. Let us hear it. And I will talk to you in the next video.